Hey everybody, welcome to the pre-market analysis of our ideas that we break down every single Wednesday. Thanks for joining us this morning. Going to give you guys a little bit of a breakdown of what's going to happen this morning once I'm done speaking. This is Spartan, by the way. Once I'm done, Beth's going to come on and give you a breakdown of what she's looking at from a macro perspective, any news events that are happening today that are important to be looking at, as well as any individual names, commodities, or ETFs she thinks will be in play as well. As a result, after that's done, I'm going to come on and give you a breakdown of what I'm looking at in regards to names that are gapping up, gapping down. We'll talk about the news associated with these ideas, as well as go through the SPY and the FANG. After that's done, South Beach will come on and give you guys a little bit of a breakdown, what he's looking at from a macro perspective, individual names and analyst point of view, and then we'll kind of go from there and do a quick little recap of this morning and get ready for the open. So without further ado, I'm going to go ahead, pass over to Beth, and I'll talk to you guys shortly. Beth, it's all yours.
Thank you so much, sir. Hey, guys. Good morning, good afternoon, good evening. Welcome to those of you who are joining us for pre-market here at Spartan Trading on Wednesday morning. Obviously, we have the FOMC to discuss. No change in interest rates will happen, but Powell once again will have to walk that fine line in terms of what the market expectation is or not. The 10-year obviously is what's driving us lower right now. And it's starting to get to levels where, if you remember on Monday, we went over the historical aspects of inflationary interest rates going back to the 1970s and what happened with the SPY and the SPX and the Dow. There was a level of initially where the market did sell off robustly until those participants felt comfortable in terms of the interest rates. Something that we have to continually be aware of. And who knows at this point, obviously the getting to the high end 1.6% has given me out as expected. These guys are brilliant when it comes to that forecast. No changes versus the actual in the forecast. The 30-year point though is notable because it is starting to go higher. Clearly not to the degree, but when you think about it, where we were as in terms of negative interest rates, right, to positive interest rates, okay, you're looking at a 200% increase. So just saying. We do have housing starts, building permits, yada, yada, yada. Who cares? EIA. Well, I shouldn't say that, but you know what I mean. All eyes are upon the fact. Yesterday, we did get the API crude. This is a walk on the wild side. No idea what that's going to be from day to day, week to week. But we have the EIA coming out as well. The timeline is 2 p.m. Eastern Standard Time is when the interest rate decision comes out. There will be no change. Then there will be a statement. We'll see how Goldilocks that statement is. And then the Powell with his presser, he'll give his opening remarks and then take questions. Right? I can honestly tell you that he's going to say what he's been saying all along. He doesn't care if interest rates go up, right? The inflation goes up. I think 3.5%. Anything above 3.5% on the inflationary side might give them a little bit of pause, but we'll see. Okay, this is what you look at the CME group. It's actually lovely. It gives you the probabilities, etc. It gives you the dot plot in terms of what the different Fed heads were saying in terms of where they see interest rates going, et cetera. There's no interest rate increase, guys. Well, 4% statistical probability, but okay, so no interest rate into 2021 to 2021. So now it's about forward-looking 2022. This is kind of cool. This is a Wall Street Journal. What they do is we go over this monthly. They basically X out what the prior month is, and then they put in green what the current month is. So that's kind of cool to watch whether there's any specific verbiage changes one way or the other. Let's see what our gal's been doing. She's selling a little bit here, buying a little bit there, selling a little bit here, buying a little bit there. This is a tough market right now for someone like her, to be honest with you, because you get these, it's almost like, as I like to call it, sloppy, choppy days. Well, one day you're up and then one day you're down and all around and stuff like that. Not easy. PDD, that's going to hurt a little bit because that's 0.40%. All right, let's take a look at the CNN fear and greed. 1 year ago today, 3. This is basically neutral. So there's a lot of tailwinds for this market once it digests what's going on with the interest rates, et cetera, all right? The question is, as far as I'm concerned, is it going to be a continuation of a rotation into small caps out of high PE multiples, mega growth, et cetera, into the small caps? You know that I'm going to say yes. This is a multi-year event, so keep bringing it on. All right, let's see insider transactions. What's important is more a function of the on the commodity side. So this OBNNF is kind of interesting. I want to take a look at that. And here you can see selling on the energy side. So this is how I like to use it for commodities. Right. Let's take a peek in terms of some of the daytime today analysts. For me, it has to be 70% and above. So that's Mochi and McDonald's. Okay. So that explains why McDonald's is up today. I think, you know, I've been saying this for quite some time, and I know I sound like a broken record, but I still say consumer staples is where you want to be. You want to be in small caps and you want to be in consumer staples. And then you want to be in infrastructure, yada, 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 and you want to basically be peeling out of, you know, the high-tech stuff, XLY, which is consumer discretionary, as well as the XLK, stuff like that. All right, let's take a look at in terms of top scores. More, the day before, we only had like 3 or 4. And then we had AMAT, Baidu, Bristol Myers, Dow, Lockheed Martin, Showrooms, and Young. Some of these, all I can say is ouch. Right? It is quad witching this week. Right? So what do we got? It's quarter end. And this is why it's sloppy choppy. It's because you really don't know what orders are going to go through. There's going to be one day up, one day down, one day up, one day down. But I can tell you that when you have quad witching, this is the site you want to look at, maximum pain, to see, okay, what price does it, in this regard, the Qs, right, have to close at to hurt the most amount of options holders. It is 315. We are right now, as you can see, at 316.85, right? So you're going to see this kind of gravitating to these maximum pain levels as we get closer to Friday, right? This is the 3rd highest correlation, and it's not your imagination, yields to how scared investors are. It's facts, right? And you can see here, this is the highest, 3rd highest in a decade. Notable, right? Now, it is a function, once again, of the market getting comfortable with the higher interest rates narrative, right? It's only 1.6%, guys. I mean, it's literally only 1.6%. But it's all about, you know, getting comfortable, rejiggling your portfolio, yada, yada, yada. All right, S&P after the VIX and a 10-year note yield 20-day correlation is greater than 55.55. Once again, sloppy choppy. You really don't get anything until past 6 months. This is notable. This is why I'm basically short. I am SDS. I'm short the SPY, right? I'm basically going to be getting a little bit more XLK puts on. Right? I'm in QID and I want to be long Dow and the Russell. Okay, it's that simple. Here's the VIX after the VIX and a 10-year note, yada, yada, yada. It is sloppy choppy as well, but we have a little bit 1 month out, 4.3%. You know, this is really hard to I know it goes back to 1990, but we've never experienced anything like this. So it's kind of like, all right, fine, moving on. 10-year note futures after the VIX 10-year, yada, yada, yada. Okay. Went up. Right. So this is telling us that, yeah, interest rates can go higher. And then you can see here, S&P, 3 months out, you start to get a little bit of positivity coming in. And then 1 year out, 100% statistical probability that the S&P will up. But so this is, once again, we have to be patient. You don't want to bet the farm on any of this stuff right now. Intraday, you basically scalp. It's all technically driven. Have your hedges on overnight, and that's the narrative. Okay, so this is all country breath. 88, what is this? 86% in terms of globally. The percentage of greater than the 50-day moving average. That, my friends, is really crazy, right? But as you can see here, it's been higher as the market started to go up. So we haven't popped this top. If we do, then the market more than likely globally will start to move higher. There's a lot of problems though. I mean, it's fairly obvious with what's going on in terms of on the European side, the UK, I mean, and then we have the Asia Pacific rim. It's not as simple as it seems. And that's why I am starting to hedge with FXI puts. And I might buy some MCHI puts as well. I was in them, I took that out of them. I'm thinking about getting back into it. So mutual fund flows, okay, bullish. Available cash, bullish. Equity money market ratio, neutral. Retail money market ratio, bullish, okay. Mutual fund cash levels. This is actually a bearish, guys, because there's not as much cash on the sideline as everybody's thinking, just say. And then we have this negative, neutral to negative consumer confidence, because it's all about the consumer, right? In terms of what they're going to spend the money on. Are they going to spend this? We know that 50% based off of polling is going to put into the stock market in terms of their stimulus checks, right? The other question is on the other side of that, what's the other 50% going to do? Are they going to spend it or are they going to save it? Do they have the bills that they have to offset? How much of that's going to actually hit the economy? All right, this is actually very bullish setup right here, guys. Right, and you can see here that basically bonds are in the old, not dramatically. If it was single digit, I'd say hell yeah. And then, as you can see here, finally we got the pullback that we needed to see on the oil side in terms of the refiners. And then we have this, and this is going to take a hit. The ICLN, mainly because plug is a large component of it. Here's consumer staples. So you can see here the commodities are all coming down. So this is actually a very nice heat map for us to go forward in terms of a tailwind. Ideally, to be honest with you, I'd love to see the Qs back down here. And then we can talk about a nice squeeze on the upside. But until that happens, it's sloppy choppy. Okay, and then you can see on a country-wise, okay, the strongest country is Mexico. Not what you would expect, not what you want to see. And then the weakest here you can see is Poland, Egypt, Peru, etc. And then you have Australia. Right? Let's see what our gal Carolyn Borden is talking. This is the Fibonacci Creek. She's now part of the Elliott Wave Trader, and I use her mainly because it's easy to, we know that the cycles are this way, but you can see, look at all the timing and price cycles. It's like, oh my God, a dot plot all over the place. Right? So this is what we're dealing with right now in the month of March. This is why we have to continue to say this is a NASDAQ sloppy choppy. And then as we get into April, that's when things start to lighten up, and then we start to get a stronger tailwind on the upside. This is for those of you who like Elliott Wave. Avi Gilbert, the best there is out there. And this is what he's looking for on the future side. And he's looking for basically a move down here to the 38.71, and we're at 39.39. So we may have another 50 points down. But it looks like we're getting a little bit of a double bottom in place right now on the futures. Okay, so let's take a peek here. We're going to do a little bit of a deep dive with interest rates as well as currencies. This shows you in terms of the Nifty 50, that's India, who's been top, and believe it or not, it's Nifty 50. Then right below that would be the Chinese SSE 100, then the Dow, and then the Eurozone DAX, right? Euro 50, and then the UK is always, it's on the bottom rung here, right? So that gives us an idea of where we are, at least in terms of 2021. And I don't actually see this changing much, to be honest with you. I think that India as well as China is going to maintain their strength. The Dow, I think, will start to pick up. I don't know if it can lap it. And then Europe, obviously, and the UK are going to be on the downside. Right? Let's take a look at the 10-year. Okay, so we are pushing higher. This is going to be, oh my God, the sky's falling. So what have we got going on here? We have right here, as you can see, a little bit of a pivot point. This goes back, guys. This channel goes all the way back to 1994, right? And I could probably take it farther back if I wanted to. But as you can see here, this is a really notable big deal sort of thing. We basically, right here was the mean. We held the mean. Now we have to see when it starts to go higher here. This is probably where it's heading to, and that's 2%. Not what people want to hear, but that's probably where it's heading to. Let's look at the fibs on this as well. And don't forget, the vast majority of this pull down in these interest rates, guys, happened from, this is 2019, December. So basically 2020 created this, because of the pandemic, created this last pull down. And the question would be, if we had not had the pandemic, right, would we have even gotten here on the downside? Probably not. We would have held this bottom level right here, more than likely. And now all that we're doing is we're basically reclaiming this quadrant, right? I'm just saying that. So this was an event that occurred, the pandemic. If it had not happened, then I think we would be here in this quadrant and we would be talking about higher interest rates, probably up to 2.65%, right? Don't forget, with all the liquidity that's out there, this is more than likely going to happen. I don't know how long it's going to take, but you can see here, it's the opposite, escalator down, and this is the elevator up. So it will take less time to, as you can see here, to reclaim these higher interest rates. TBT. This is what I have us in on the swing side. I've mentioned this, and I'm in this as well. It's clearly because I'm looking for higher interest rates, right? And this is the inverse of the 20-year inverse. Okay, so that would be the inverse of the TLT. Let's take a look now at the dollar. As you can see here, we talked about this on Monday, and it's actually pretty counterintuitive. And the reason is that in the 1970s, the dollar actually went down when inflation went up. And you would say, hey, that's not possible. Well, that's exactly what happened. So here we are. The dollar is not showing us anything that says, oh my God, the higher interest rates, we're going to start screaming here on the dollar side. We don't see that. It still hasn't even, this is the monthly, still hasn't even gotten up to the top end of this range here on the extension. So, and the reason that is partly because overseas rates are going higher as well. So here we are. This is the euro. As you can see, it has been strengthening since March. Now it's basically pulling back a little bit. I don't think it actually goes below this. We'll keep an eye on that, and that's 118.48 for those of you who like to trade the euro. It's a pretty strong line. If it does, then you have room down to 116.26. Let's look at the British pound. This is, you know, when I looked at this, boy, seriously? Okay, so we've had, this is since 2016, a multi-year sideways consolidation pattern. The low end has been 118. We had this little with the Brexit, right? But you can see here, it's actually, and this is why, once again, the dollar is not screaming higher, is because you've got these components of it that basically are moving higher as well. So here's the British pound. I think it's going to continue to go higher, guys, but it's a commodity, right? So at 144, I'd be a little bit cautious with it if you are long. And you can see here as well, okay, it's at a pivot point. And I'm a little bit surprised, and I'll be honest with you, because I didn't realize, I just looked at this. I haven't looked at it in a while. And I forgot about this whole multi-year range on the downside here. that it basically didn't even break and hold below the 2016 low. So that's a bullish narrative for the British pound, right? Here's the dollar yen. As you can see here, let's bring this up. So that's the monthly. There we go. It had been strengthening. Now it's starting to weaken. This actually looks to me, to be honest with you, that the Japanese yen is going to continue to weaken against the US dollar. That's what it's looking like to me. So that's the opposite than the UK, right? So when the British pound, so when this goes up, the currency is actually weakening. And we're at key levels here, guys, going back to 2015. So be aware of that. This is a big deal. And the reason why I say this is because there's all this talk about the Japanese coming back to the bond market buying. And if they did, right, they would be buying US dollars against their currency. So that's telling us that this actually may come to fruition, that the Japanese may indeed be buying treasuries. Okay. Let's take a look here at the Chinese yuan. Not much to talk about. Sideways consolidation. We still have the thumb on the scale in regards to what the regulatory arm of China is going to be doing with, the mega companies like Baba, whether they are serious about Tencent, about breaking things up. That's a huge headwind. But once it gets digested, to be honest with you, I think that's really positive longer term for the Chinese market. So these are things that they're doing on a regulatory basis that I think give the necessary tailwind for the Chinese market to start to break out and move higher. When that actually happens, I can't tell you. Let's look at gold versus the dollar, right? It's an asset class. So as you can see here, gold had been weakening since this, well, we actually had the top here back in August, and then we had the second top here in January 2020, which is fascinating because this tends to be the seasonality strength for gold. I'm not willing to say, to be honest with you, that Bitcoin is a replacement for gold. I keep saying that. I think they got it wrong. I think it's basically a financial entity in terms of US dollar replacement. I don't think it's a function of safe haven for gold versus Bitcoin. I just don't. Right? And here you can see here, this is the dollar against silver, consolidated for multiple months now. Right? The dollar has weakened against silver. I'd actually love to see it, silver start to reclaim its strength here. And you can see right here that there's an extension that goes right down there. I think this will hold up. I think we'll start to push higher. So I'm anticipating that silver will outperform the US dollar. That's exactly what it means. My time is up, my friends. Keep an eye on FANG, just so you know. This is a key pivot level, 66.44. Right. Welcome once again for those of you who are joining us, for new members as well as those on our live YouTube stream. It is now time for me to pass it on to Spartan. Are you ready, sir?
I just need about a minute or two back here.
Not a problem. Okay, so this is what I'm looking at in terms of what interests me right now is this is the weekly. If this closes below this extension, I have to move this up a little bit because it's not quite perfect, right? So it's right here, this extension. I'm gonna put some more protection on, right? And that would be through the XLK. Right? So this is 66.78, just so you're aware of that. Now let's talk about the VIX, right? I kind of pounded the table on this. It bounced right off of where I said it was going to bounce off of. Now the question is going to be is how high up do we go in terms, I'm suspecting that it's going to get to 2368. And the reality is this is a commodity, all right? You know, look at it like a commodity. You want to buy when nobody wants to buy, you want to sell when nobody wants to sell. When people start telling me it's going down to 10, I said, oh, I'll take that. Because you want to buy when nobody wants to buy. That tells you that people don't have protection on, okay? That becomes a problem. And, you know, let's be honest as well. If you look at the flow algo, in terms of options flow, it says the same thing, right? That people had not put on any protection. We did not see, you know, it was not notable in terms of any put sweeps. that came in at the end of the day, except that we did start to see the QQQs. So this was notable in this, but it's actually very short dated, right? So they're looking at quarter end basically. So this is protection hedging going into the end of the quarter, and we're going to see a lot of that, guys. Right? We did see the SQQQ as well sweep. I'm already in that, so I did not do that. Like I say, I'm in leverage inverse ETFs as a hedge against my portfolio. We'll see how things play out. I think we're going to get a bounce once this afternoon, and the simple reason being is that, you know, buy the rumor, sell the fact. I just don't think anything's going to be said that's going to make this market say, oh my God, interest rates are going up to 3%, something like that, right? So we have had a nice pullback. I'm going to defer to Spartan on that because that's what he does best. We continue to see money put buying on BABA. As you can see here, yesterday it was nonstop. Okay, so this is important because it went all the way out to 2022 June. Right, so this is what I'm looking at. These sweeps, how far out are they going? So this is an institutional hedge. Don't forget that BABA was the darling for so many months, right? Now it's basically seeing the reverse of that, and that's to be expected, right? We're also seeing, in terms of put sweeps, EFA, which is the small caps globally, excluding the US. And let's take a look at EEM. There was nothing there. And let's look at FXI as well. Okay. Nothing there as well. So yesterday was the first time, and you can see here was nonstop. It started at around 10 o'clock, this put buying, but a lot of it's, you know, quad witching for Friday. A little bit went farther out, but this is not, you know, this is not like with the BABA going out to 2022, you know, saying, oh my God, this is big hedges going on right now. But irregardless, okay, if you look at this in terms of yesterday's option flows, right? I mean, QQQ 10 million, that's nothing. SPY 6.8, nothing, right? And now we're seeing that the IWM didn't even hit the ticker right now. And you can see here the lovely call sweeps, right, that were being taken out, UAL, AMD, Tesla, and stuff like that, right? You know, this is just, to me, okay, this is an opportunity to buy lower. I'm not saying, you know, right now I have Tesla puts on, I have Boeing puts on. We talked about that yesterday, and I was leading the room down on that. I still have those. I'm going to exit it probably rather quickly this morning on the open. We'll see what Spartan has to say, though, in terms of that regard. And that's the brilliant.
All right, Beth, I'm ready to pop on.
Bye. Bye, guys. Have fun.
All right, thank you so much, Beth. What's going on, guys? If you guys are new to the chat, I will post the Discord link for you guys later on once I close down the YouTube stream. So you have to be patient waiting for that. Let me just pop up the screen share here. So let's take a look at some of the names that we're looking at today. Some of the news associated with the gap up, gap down ideas here this morning. Crowd, GS, PDD, Riot, Plug, and then Huge. So Crowd earnings beat, EPS and revs year-over-year growth, 74.2%. Q1 guidance raised, 2022 guidance, EPS in line and rev raised. Stocks gapping up. Goldman Sachs gapping up at typical rates. PDD earnings mixed, or gapping down. Earnings mixed, EPS miss, rev beat, year-over-year growth 162.4%. Growth, CEO stepping down, stocks gapping down on that. Riot gapping down in sympathy with Bitcoin. Plug, these guys are trading lower after the company reported that there are errors in their accounting and will reinstate some of its previously issued financial statements. So that's a negative there. And then Huge, FSD Pharma announced license agreement to develop FDA-approved veterinary drugs for treatment of gastrointestinal disease in dogs and cats. Stocks gapping up on that. Let's take a look at these names from a technical standpoint intraday. So first two that we're going to be looking at today, guys, Crowd and GS. Let me just pop up there and there. Looks like Crowd's giving back its entire move from the earnings. All righty, let's take a look at this thing from an intraday perspective here. So Crowd pulling back here. Let's mark that. Let's mark that 50 MA to the upside. No resistance here. Let's take a look at this thing from an intraday perspective. See where we're at. So crowd up a little bit from last day's close, but it looks like it's still range bound from the last couple days. And by looks, I mean it literally is. Let's see if I can go a little bit closer. Nope. Alrighty. So on crowd 201.88, pivot to the upside today. If this level is able to be reclaimed, we got room towards the 207.87 resistance. That level breaks. There's room towards 214.37 on the upside. Unable to hold the pivot point, look for a push or pull back towards the 193.97 support on the daily. That level breaks. It's room towards 187.25 on the downside. Overall in the crowd, going to be leaning on the bullish neutral side today, looking for basing to take the name long. So we'll have to see it, see if we get a little bit of basing into some support here. Otherwise, I do think it will continue to sell off if that doesn't occur. All right, let's take a look at GS, Goldman Sachs, a little bit of a gap up. Daily chart continues to look quite good. It's been an absolute beast. Let's take a look at where we got room to today. Let's mark that. Let's do a little bit of a Fibonacci extension, get a higher level here. 355.29. Okay. All right, so 345.65, pivot to the upside today. This level is able to hold. Room towards 349.32 to 352.73 on the upside. Unable to hold, look for a pullback to 340.32 to 336.36 on the downside. Overall on Goldman Sachs, going to be leaning on the bullish neutral side today. If we can get back above that pivot, I think we can grind higher. So that's what I'll be looking for there. A little bit of a downtrend hourly trend break as well. So we'll see if that can hold this morning. So that's crowd, and that is Goldman Sachs. All right, let's take a screenshot of these two, and let's move on to the next. All right, next two names, PDD and Riot. All righty, so PDD. All right, support. Let's see if there's any other support between that. Use that. All right. Okay. So 146.29 pivot to the downside today on PDD. The sell was unable to hold. We got room towards 141.69 to 136.24. Able to hold up. Look for a push back towards 153.70 to 157.88 on the upside. Overall on PDD, going to be leaning on the bearish side today, looking for a continuation lower if this level is unable to hold. So we'll keep an eye on that 146.29 level. The earnings weren't bad. It's just, obviously CEO stepping down. It's a little bit bearish. And then you do have a uptrend break on the daily, rejection of EMA resistance as well on the daily. So some bearish look from a technical perspective right now. So we'll see what happens there. All right, let's take a look at Riot. All right, so let's see. So we are below EMA support on intraday. Actually, we're testing the intraday EMA support, looks like, on Riot. Right here. Okay, that's going to be the pivot then. $51.31, 46.06. All right, 54.07, guys. Pivot to the downside today. This level's unable to hold. We got room towards 51.31. That level breaks. We got room to that 46 spot. 46.06 on the daily to the downside. Pivot able to be reclaimed. Room towards 57.05 to 61.14 on the upside. Overall on Riot, going to be leaning more on the bearish neutral side today, looking for a continuation lower if it's unable to reclaim the pivot, which is also a major daily EMA support level. So we'll have to keep an eye on that. So that is PDD and that is Riot. All right, let's take a look at Plug. Let's take a look at Huge. So Plug gapping down. This one could get a little bit ugly, looks like. It's kind of annoying. I can't see the lower end levels of support. I guess we'll have to look at it like this on the daily. Well, let's see if I throw it on the weekly, I can actually see where the price is at. Nope. For some reason it's not loading it. Oh, there you go. For some reason it loads it on the weekly, not typically on the daily. But that's okay. I can understand where we're at. So pivot to the downside today, guys, 33.20. This level was unable to hold. We got room towards 30.17. And then the 25.56 level on the downside. Able to hold, look for a push back towards 36.94 to 41.70 on the upside. Overall, I'm plugged, going to be leaning on the bearish side today if that pivot point is able to break. If that pivot point breaks, we should see continuation lower. So 33.20 is the level to be watching today. We'll see what happens. It is a decently strong support level, seems to be holding intact for now. Keep an eye on it this morning. Last but not least, this huge. Looks like a former runner that typically sells off, and I do think the news is whatever. Let's see, $3 is where we're at. All right, 292 pivot, unable to hold, room towards the 243. That level breaks, you got room towards 192 on the downside. Able to hold, look for a push back to 353 on the upside. If that level breaks, you got room towards the 444. Overall, going to be leaning bearish on huge. Going to be looking for a any sort of pop topping to take the name short today. Like I said, I do think the news is probably not going to hold the name up. So I'll be looking for it to come in a little bit. That is plug. That is huge. I guess I'll have to actually do this. Let me flip this back to the daily so you can see the levels. There we go. All right, so that's plug. That's huge. Let's take a look at the SPY and the FANG. See what's going on there. So market's gapping down, as we all know. Might as well give us all the levels today, because with FOMC, we're going to have a range, I'm thinking. Let me just quickly take a look at the daily as well, take all the levels off. $394.76. Okay, so short-term EMA support test, bigger term 390s, 50 EMA 383. Okay, got it. So we did fill a little, we actually were a little bit extended to the upside yesterday, which we did fill today. That's what I want right there. So 394.17 going to be the pivot to the downside today. This level is able to hold. We got room for continuation back towards the 395.39 to 396.83 resistance on the upside. And obviously the further resistance levels if those break. Unable to hold the support, look for a pullback to 392.30. If that level breaks, we got room for further continuation lower to 390.85 on the downside. Overall on the SPY, going to be leaning on the, I'm thinking bearish neutral side of the gate. Probably looking for it to trade it a little bit lower and then consolidate before the FOMC. And then, of course, we'll see what happens on that. Hard to say. Beside this, let's do the VXX real quick. So VXX did reclaim that 1315 level, which was the previous all-time low on the VXX, which is an important level to be watching. This level continues to hold 1340 resistance and 1396 levels on the upside on the VXX, and obviously the SPY will continue to come in. We may see a little bit of the divergence on the VXX and SPY. If the SPY starts to bounce, we may still see buying on the VXX just for hedging. But again, we'll have to wait and see what happens, today. So that's the VXX. Keep an eye on it. Basically, I use it for direction with the SPY, or use it to help me determine what direction the market's going. So that's why I keep an eye on that at all times. So that's the SPY, that's the VXX. Let's take a look at Apple here. See what's going on there. $123.67 pivot to the downside today. This level is unable to hold to get room towards 121.54. If that level breaks, we see further continuation lower into the 120.19 spot on the downside. Able to hold up, look for a push back towards the 125.33 to 126.98 resistance on the upside. Overall on Apple right now, going to be leaning a little bit more on the bearish neutral side, looking for a little bit of a dip. And I think, again, we'll get consolidation before the FOMC. But right now it's downtrending, so sticking with the trend until the trend breaks, in the short term at least. So that's Apple. Let's take a look at Amazon. So Amazon, the daily breaking the short-term EMA support. Let's draw the trend. Let's see what's going on in that regard. All right, so we got a little bit of room to retest that support, looks like. Do we? 281. Yeah, no. That's off. For some reason it's not connecting when I zoom. One sec, guys. I'm just going to move this to where it should be. So I do believe the trend is breaking. Yes, it is. All right, so 30, 64, 55. Pivot to the downside today. This level is unable to hold. We got room for continuation towards 30, 21, 36. Able to hold, look for pushback to 390, 30, 97, 31 resistance on the upside. So, if I'm going to be leaning on the bear side if Amazon's unable to hold the trend. We'll see what happens there. Confirmation is going to be key, guys, on a lot of these. So being patient, waiting for the price action to show you what it wants to do around these pivot points, I think will be the big key this morning. Amazon, that's Netflix, or sorry, that's Amazon. Let's take a look at Netflix. Netflix 251.87 pivot, unable to hold towards 515.47 to 507.25 support. Able to hold, look for pushback to 530.57 resistance. Overall on Netflix, going to be leaning on the, I think, bullish neutral side this morning. Looking for a reclaim of the pivot, a little bit of a bounce, still stuck within its consolidative range on the daily. EMA supports intact on the daily as well. So I'm thinking it's going to be able to stay within that range. Let's take a look at Facebook, which is one of the better looking FANG names, but it did get rejected, I believe, at this downtrend. It should be back below. Yes, it is. So let's take a look at this intraday. I'm actually going to mark this 273 level, which is the short-term EMA support, as well as a range. I'm going to also mark this one. Okay, let's take a look intraday here. There's the trend. All right, so 276.58, guys. Pivot to the downside today. The sell is unable to hold. We're in towards 274.05 to 271.61. Able to hold. Look for a pushback to 280.56 on the upside. I'm actually leaning on more on the bullish neutral side of Facebook today. Looking for this name to get some basing and get a bounce. Confirmation again is going to be key. Actually needs to base and show us that some buying's coming back in. The only reason is it has had relative strength the last couple of days. And I actually think the daily chart is fairly bullish still. So that's what I'll be looking for on Facebook. Let's take a look at Google, which we know this thing's been range bound for a long time here. Same levels looks like as before. So that pivot point, 2054. It's also testing the uptrend right here. The sell is able to hold. We got room back towards 2110 resistance on the upside. Unable to hold, 2017.44 will be tested on the downside. Overall, going to be leaning on the bullish neutral side today. Looking for that pivot hold and a bounce. We'll see if that can actually occur. You can see how it, has been staying within this range, guys, for a long, long time. That pivot point obviously gives it a lot of direction from what we've seen in the past. So keep an eye on it. I think that's going to be the key on that name, but leaning bullish, neutral on that name, looking for if the pivot is able to stay intact, I should say. So we'll see what happens there. Alrighty, guys. So that's a SPY, that's a FANG. Those are the individual names that we're looking at today, guys. It is FOMC. Make sure to keep an eye on the VXX. Just keep an eye on, tech names, opening names, banks, see where the money rotates. Should be a very interesting day. Alrighty, I'm going to go ahead and pass over to Selpeach. He'll come on, give you a breakdown on what he's looking at from a macro perspective, analyst perspective, as well as individual name perspective today. And we'll go from there. Selpeach, if you're ready, it's all yours.
Hey guys, good morning. Happy Wednesday. Let's see what we got. Okay, so clearly it's a bond day, right? We got a lot going on in the bond market. So we look at the 10-year and it's up 0.05 at 167, right? Is this a high? Yes. Okay. So that's something going on, right? Are they trying to get it in front of the Fed speaking today? Maybe so, trying to get him to be a little more cautious in, changing his, changing the pattern that he's been doing. Okay. Maybe, he does, I'll talk about it in a second, but let's move on for a second, just see what the other markets are doing. All right, UK, it's up 0.05 there too, okay, as well at 0.84. Germany's moving up, okay, everybody's moving up, minus 0.298. Italy, everybody, the whole shebang, okay? So everybody's rates are moving up. Let's look at what we do every day. Commodities, oil is now 1%, right? That makes a lot of sense. Higher rates, lower growth. Okay. Gold, I don't care. Copper is up 2 cents, so that argues for continued GDP growth. We've been saying that all along. Looking at the currency market, dollars up against the North American currencies, flat against China, up against Japan, and kind of unchanged against Europe. Crypto down around 2%, let's say. I'm just going to go with Coinbase for now on. Okay, so it's down 2% there. Because the other ones, you know, it's how they could close them and so on. I went into that yesterday with you guys. And the foreign markets, FTSE's down 0.34, DAX is down basically unchanged. And over in Asia, pretty quiet overnight. Returns year over year, I went over a little bit yesterday because this was basically the low a year ago, and the rate, you know, returns are, I don't know, 75% for Nikkei, 83% for our NASDAQ, Germany 62%, et cetera, et cetera. Okay, so we have these higher rates this morning, and you have Powell speaking at 2 o'clock. Okay, that's really the main thing. Is he going, you know, he has a Q&A today. He's probably going to talk about, you know, he's going to start talking about his projections. He might even do that, what's that dot plot thing, where he tells you where he thinks rates are going to be moving out. He has said he won't raise rates until the end of 23, but the market is seeing really big GDP growth, right? I think BlackRock is saying, what, 7% for this year, 3.5% for next year, and we have 10-year rates at 162. Those two don't kind of jive, all right? With those kind of GDP growth and rates at 162, that doesn't make a whole lot of sense. So, you know, what is Powell going to say about it? He may introduce this Operation Twist, which really means, I don't think he will, but that would, the market would really like that. What that effectively means is he buys longer dated bonds, trying to keep a lid on rates going too high, too fast. He may do that. I don't know what he's going to do, okay? Market is trying to, I think this is a shot across the bow saying, hey guy, you know, we can take this market apart if you don't play ball with us. That's what I think the market's saying. And until they get what they want, they cry, you know, and then they get used to it. So like we're seeing a higher rates today. So let's say the rates went to 175, okay, over the next week and a half. The market learns to live with whatever the situation is. But when it first sees a situation it doesn't like, it pouts and it cries and it takes the market down. So I think that's what you're seeing, basically, you know, that pout period. Additionally, we've had a lot of things positive for the market, okay? There's always been like a carrot in front of the horse. And there aren't a whole lot of carrots left that we can get from, you know, there was a few stimulus bills. There was, when is the vaccine coming? You know, things are getting a little better, et cetera, et cetera, et cetera. Like, what's the good stuff to look forward to now? Okay, they paid the stimulus. The COVID, in which I've been saying, you know, for a month now, is basically over, because if you look out 6 months, we'll all be vaccinated. And so, what's going to happen? Where's the carrot? And the carrot is nothing. Okay, the rip is we're going to get higher rates. So all of a sudden, you have nothing to look forward to, except maybe higher earnings for companies, which is important. But you have competition for equities with higher rates. So the stock market is wrestling with this stuff. Now, look, in the scheme of things, a 1.65 or 1.7 or even a 2% 10-year really doesn't, you know, if you have a 2% 10-year and you have, let's call it, for argument's sake, 2% inflation, that's a zero return. So to put your money in bonds, you got to be a dope. Okay, because at the end of the day, you're not making any money, and in all likelihood, you're probably losing. Okay, because the rates go up and you buy the bonds and the price goes down. So you're probably losing. So I still think that equities are the best game in town, but the market has to digest this new paradigm that we're in. And I think that's what we're currently going through. And it's going to exist as long as, you know, this new introduction of higher rates. You know, if things kind of move up a little bit and then hang out, then the stocks will be fine. But for the time being, we're seeing higher rates and the stock market is pouting. And it's going to stay that way until it doesn't, until we get some kind of plan that the market says, okay, this is okay. So we got a lot of crappy things coming. We got higher taxes, right? We got all these, we got these houses of Congress looking at trading and stuff like that. There's a lot of negativity and no carrots. So I think the market is kind of like got this headwind, and we're going to see it until we don't. And that's really it. You got an avalanche of SPACs, which are sucking money out of the market. And they don't stop. Every day there's 5 more. You got a lot of secondaries. You got a lot of IPOs, all sucking money out of the market. And, there's not a whole lot of good stuff, except probably corporate earnings are going to be pretty decent. Well, Access, I don't know how old you are, but everyone in my world, I'm older than you probably, is vaccinated. Okay. And the president did say, the president did say that everyone will have access to the vaccine. I think he said May. So the stock market is forward-looking 6 months out. And I say anyone who wants to be vaccinated 6 months out, who wants to be vaccinated, will be vaccinated, okay? And that's how the market looks. And I stick by that. No matter what you say, I understand that you disagree, but you're entitled to disagree. I'll stick with my down in Miami and in New York, everyone I know has gotten access to the vaccine. And I don't care what age they are. Okay, just sign up and walk in. All right, so that's that. What else is going on today? Okay, let's see what else we have. That's a lot, actually. Let's look at research. Research on days like today doesn't mean really squat, but let's look at it. Okay, you had that plug power situation. A couple of guys are downgrading plug. A couple of guys saying it's a unique opportunity to buy the stock. It doesn't seem like it was like the typical accounting fraud that you would see from time to time. It seems as though there are nuances to their particular situation, and they're hot. And since this is a new area of business, it sounds as though, it was like an honest error. Nevertheless, the stock is getting smoked. But I don't think it's as ordinarily, if I see accounting irregularities, I run for the hills. Now, I wouldn't buy this for a bit, but I don't think it's as bad as an accounting irregularity, even though let's say Truist downgraded 1 or 2 other places, a couple of guys like it. That's really on both sides of the aisle, people are weighing in. On the other sell side, JP Morgan doesn't like Coop, reiterates the sell and raises the target from 121 to 125. Obviously, this guy is not in sync with the market at the moment. Okay. They downgraded, Morgan Stanley does MOMO to sell, and they keep the target at 15, stock 1680. This is really surprising for Morgan. They reiterate the sell in UPS and an 80 target. I don't understand what's going on here. It's not like Morgan Stanley to take a gigantic super company like UPS and hate it as much as they do. They have a new CEO, the gal from Home Depot, CFO there. She's a stud, or studess as it would be. I don't know where they're coming from, but they hate the stock. Initiate Comcast at sell at Wells Fargo, target 48. And Wolf downgraded NRG and VST. Those are basically the downgrades. Okay, let's look at the upgrades. Okay, what do we have? JP Morgan likes Micron. They're selling a division. They think that's a positive. The division never really took off for them, so they're getting out of that. And they have a 130 target on the stock. A couple of other guys like Micron as well. One guy was saying they're going to earn they could earn $15. Who was that? Citibank. They could earn $15, and they as well have a 130 target. Okay, and they think that target could be increased to 150. All right, so Street likes Micron a lot. Let's see what else we have on the long side. JP Morgan says Qualcomm has headwinds from Apple making their own chip, but they remain positive regardless, 170 target. Cowen upgraded STX. Okay, this was a pretty, Cowen's not so bad, actually. They upgraded to outperform, and they increased the target from 65 to 95. This group has been acting pretty well, so I think it continues. There's a big call out of a place called Jones Research. Jones Research used to be a company that was actually a beard for hedge funds and who were trying to take toehold positions in stocks. I used to use them all the time. They're based out in California. And now they have a research department, and they like this SAVA. They think it's a pure play on neurological type of biotech. And they're going after Alzheimer's, and they have 110 target on the stock. I mean, this stock is not for the faint of heart, but whoever gets the Alzheimer's drug, the stock is going to go, batshit on the upside. That is one of the special things that can be, gazillion-dollar drugs. That and like sepsis and stuff like that. Okay, Robbie Truist likes Space and MAXR. They initiate both with buys. Space was a 50 target, stocks 32. MAXR is a 59 target, stocks 43. And if you recall, ARK is trying to do an ETF in that space. I don't think that's gotten approval yet, but anyway, they like those stocks. Baird likes Amazon, $1,400 target. Everybody likes Crowd, okay. McDonald's was upgraded at Deutsche Bank. Market share is going to increase, they're saying. A couple of guys like Teladoc. I see someone said Teladoc just dumped. I mean, the techs are going to dump with higher rates. I mean, we this is the way it is. And I'll get into Mr. Market in a minute. VFF, somebody raised their target there. Stock took a dump yesterday along with the other pot stocks. What else? Wainwright likes CPRT. And Wedbush likes Lyft. They raise it to a top pick. They raised the target from 72 to 85, stock 64. Now you see Uber's dumping a little bit today on that situation in Britain where they made where they made all their drivers employees. And the question I think is, why don't, if it's good for the drivers, why wouldn't they all go on strike and say, hey, listen, we want the same deal? So Uber's under a little bit of duress because of that. And Wedbush likes this LC, which acts really great. And transitioning to Kathy Wood, she's been buying this LC. She bought another 360,000 shares yesterday. She bought PDD, which looks like she got in front of a buzzsaw because those earnings weren't so good. She continues to buy this Vuzi. Vuzi had earnings yesterday, was down a couple of bucks on that. And this new SPAC, BFLY, which is like a biotech platform, she continues to buy. And on the sell side, she continues to sell this Taiwan Semi, which has been a consistent name on the short side on the sell side for a week or two. Okay. What else do we have? I talked about the virus. I talked about the dollar. Mr. Market's been really tough because every day is different. Someday, on Monday, the techs are good. On Tuesday, they're crappy. On Wednesday, they're good. On Thursday, they're crappy. Banks, same situation. You don't get any follow through. All right. So it makes trading a lot more difficult because it's so choppy. And until this chop fest is over, I suggest sticking to, Spartan type names, focusing on that versus the market, and wait for the market to have some cadence to it, which at this point it does not. It's been like 2 or 3 weeks where they hand the baton off to a different cast of characters every day. Okay, so one day it's the tech, next day it's growth stocks, next day it's value stocks, growth stocks, value stocks, growth stocks, value stocks. Every day is different, and it makes trading, to me, really difficult. You can't print money like we've been doing for whatever it's been, a year and a half or so. So that's what we have, and you play the hand that you dealt. You can't change it. So when it's tough or tougher, you gotta act accordingly. All right. So that's that. New issues. How much time do I have? A few minutes. Okay, so we have a syndicate calendar today. There are 1, 2, 3, 4 IPOs. One of which is a SPAC. I'm sure there's more than one SPAC, but that's the one they listed finally where I looked for them. They have this OLO. Okay, this is a restaurant online ordering system. This should be decent. It's a Goldman Sachs deal, 16-18. They raised 2022, and it comes out at 25. Goldman Sachs. It'll be the typical crap. Okay, the big boys get in at 25. It opens at 37. The idiots buy it at 37, and the stock goes down. That'll probably be what happens again. And there's a new airline coming out also, out of Barclays. $9 million at $24. Name is Sun County Airlines, SNCY, ultra low cost. So it's probably going to compete with Spirit. And it also has a cargo division. This was also raised from their initial indication. Should be okay. Not as good as OLO, I would imagine. But it'll be okay. And there are 1, 2, 3, 4, 5 secondaries. The ones we probably looked at is this Ruby, which has been a hot stock, and Kofax coming at 46, and it's trading below that. So that's that. And later in the week, you have 7 IPOs and 8 more secondaries. I'm sure the secondary numbers will grow. And do I see Sun County? Yeah. Are you a GDRX master? Thoughts on going long here at 37? Oh, you are. I have to look at it, Eddie. Let me give it a good look because I'm running out of time, and I'll DM you or write it on the chat. So that's about it. This may be my last day for a bit. I don't know what time my surgery is tomorrow. I'll let you guys know. If I can come in, I will. And I don't know when I'm coming back, actually. I just don't know, unfortunately. So that's my story. I'm going to pass it on to Spartan, guys, and I'll be here all day, and I'll let you know what my situation is. And it's all yours, Spartan.
Alrighty, thank you, South Beach. All right, guys, morning. I will post the Discord link for you guys once I do close the YouTube stream down, so just be patient for that if you guys are newer. Let's take a look at what we got going on today. Let's see here. There we go. So pre-market tickers on watch, guys. If you guys want to look, you can look at the action plan and all the charts that we posted here. There you go. Let's take a quick look at on the option side as well. There you go. Okay, so let's take a look at what we got going on today. A couple different things that we're looking at. So a couple ideas. Crowd, Goldman Sachs, PDD, Riot, Plug, huge. Crowd earnings beat, EPS and revs, year-over-year growth, 74.2% Q1 guidance raised, 2022 guidance EPS in line of revs raised. Stocks gapping up on that slightly at this moment. Goldman Sachs gapping up and same with the rates, pushing PDD earnings mixed, EPS miss, rev beat, year-over-year growth, 162.4%. CEO steps down. Stock is gapping down on that. Riot gapping down in sympathy with Bitcoin. Plug Power shares are trading lower after the company reported there are errors in its accounting. So stock's gapping down there. And then huge gapping up on a FSD Pharma announced license agreement for their development of their FDA approved veterinary drug. Let's take a look at these names from a technical standpoint intraday. So first couple names that we're going to be looking at, Crowd and Goldman Sachs. So let's take a look at those. Crowd, Goldman Sachs. Let's see what we got. So Crowd 201.88 pivot to the downside today. This level was able to hold, or upside, I should say, actually. Besides, this level was able to hold. It got room towards 207.87 to 214.37 on the upside. Unable to hold 193.97 to 187.25. We tested on the downside. Overall on Crowd, going to be leaning on the bullish neutral side if we can get back above the pivot or get some basing to the downside to take the name long. So that's what I'm thinking on Crowd. Goldman Sachs, 345.65 pivot. This level is able to be reclaimed. Room for continuation higher to 349.32 to 353.73. Unable to hold 340.32 to 336.36 will be tested on the downside. Overall, all going to be leaning on the bullish neutral side of Goldman Sachs, looking for a continuation grind higher if we can reclaim that pivot. Do have a downtrend break in the on the hourly to the upside. So that is a positive from a technical standpoint. Let's take a look at PD. Let's take a look at Riot. PDD 146.29 pivot. This level is able to be reclaimed. Room towards 153 or hold. Room towards 153.70 to 157.88. Unable to hold. Look for pullback towards 141.69 to 136.24 on the downside. Going to be leaning on the bearish neutral side if it's unable to hold a pivot on PDD. So watch the pivot point this morning. It could be a super important level. Let's take a look at Riot. Riot 54.07 pivot, unable to hold, towards 51.31. That level breaks 46.06 will be tested. Able to hold, look for pushback to 57.05 to the 61.14 level on the upside. Overall, going to be leaning bearish on Riot again if the pivot's unable to hold. Let's take a look at Plug. Let's take a look at Huge. Uh, 33.20 pivot. This level is unable to hold. You got room towards the 30.17 on the downside to 25.56. Able to hold. Look for pushback to 36.94 to 41.70 on the upside. Overall on Plug, going to be leaning on the bearish side today. Looking for well, if the pivot's unable to hold, I should say. Right now, it's doing a pretty good job of bouncing off the lows. Watch that uptrend this morning. See if it breaks. If it does, it could come in a little bit more. Huge 292 pivot, unable to hold towards the 243 to 192. Able to hold 353 to 444. Next resistance on the upside. Going to be leaning on the bearish side of Huge, looking for a pop topping to take the name short today. Alrighty, let's take a look at the SPY and the FANG. $394.17 pivot. Levels able to hold, room towards 395.39 to 396.83. Unable to hold, look for a pullback to 392.30 to 390.85 on the downside. Overall on the SPY, going to be leaning on the bearish neutral side today out the gate, looking for a little bit of a pull, continuation lower, and then I think we will get some basing before the FOMC, and then obviously we'll see what happens there. But right now it's going to be looking on the bearish side. One thing to watch for direction is the VXX, in my opinion. 13.15 is the key level. If that continues to hold, then I think that you'll see continued selling pressure on the SPY. Starts to come in, then we should see an inverse reaction. Let's take a look at Apple. Pivot to the downside today. 123.67, unable to hold towards 121.54 to 120.19. Able to hold, look for a pushback towards 125.33 to 126.98 on the upside. Overall on Apple, going to be leaning on the bearish side today. As long as that downtrend stays intact, I do think we continue to go lower. Let's take a look at Amazon. Pivot to the downside today is going to be the 30.64.55 spot. This level is unable to hold, room towards 30.21.36. Able to hold 30.97.31 will be tested on the upside. Overall on Amazon, going to be leaning on the bearish side today. Netflix, 521.87. Pivot, unable to hold, moving towards 515.40. That level breaks, 507.25 will be tested. Able to hold, look for a pushback to 530.57 on the upside. Overall on Netflix, going to be leaning on the bullish neutral side today. Looking for it to stay within the range, get a little bit of a bounce today if these levels are able to hold. Let's take a look at the Facebook. $276.58. Pivot, unable to hold towards 274.05 to 271.61. Able to hold 280.56 will be tested on the upside. Overall on Facebook, just because it's had relative strength lately, and the daily chart looks one of the best at the FANG. Going to be leaning more on the bullish side today, bullish neutral, looking for basing to take the name long. Let's take a look at Google. Pivot, going to be the 2054.24 spot. Levels able to hold towards 21.10.95. Unable to hold 2017.44 will be tested on the downside. Going to be leaning on the bullish neutral side of Google here. So that's the SPY, that's the FANG. Those are the individual names that we're looking at today, guys. This is your first time coming in on the YouTube stream. We do this every single Wednesday.